All right, we are up and running. Gotta love technology, but when it fails right the last minute, you want to do something about it. Good morning, good morning. How you guys doing today? Welcome. Hope you had a good weekend and listening to a little bit of Mozart this morning, as we always do. And today I wanted to go over something very important. I always try to use metaphors to have my students understand things better. And we're going to use a metaphor today that I think is going to help you in understanding the markets. There's a very simplistic way to look at the markets, and so I'm going to try to introduce something to you today that's not going to go too much into detail of what we teach at the school, but it's going to give you a generalized idea of different approaches to the markets. So, nice to have you. First thing I'm looking at here is the S&P 500. Understanding context is always very important, like I say. And last week we were talking about the S&P 500. We're talking about what we were expecting with price and how it's retracing down to areas of buying. Let's close that. And I was also scanning through Yahoo. Have you guys seen Yahoo Finance? Do you guys use Yahoo Finance? You should see Yahoo Finance. They've really upgraded the layout of Yahoo Finance. It's looking really snazzy. And yeah, I think you guys should pay attention to it. The layout's really nice. I was looking at it earlier today, and I was also over the weekend scanning through it, and I really like it. So I came across this article about Microsoft stock. So I started reading the article, and a few things stuck out to me, and trying to put myself in the mindset of your average investor, average trader. And as I was reading the article, it started to become a little bit more clear to me, a great opportunity to share something with you guys. So I come across this article about Microsoft. Okay, we have earnings coming out this week. I think Thursday at some point after hours or whatever. And so I'm looking at the wording here as I'm reading this article. So let me take you step by step in the life of your average trader, okay? They come, they see an article, they're thinking about buying Microsoft, but they're a little bit worried because it's dropping. They don't know why it's dropping. They think to themselves, well, the market's been dropping, so maybe that's the reason Microsoft is dropping. But I'm also reading a lot of articles about how the stock market might drop 30%, and I don't want to buy Microsoft because if it drops 30%, you know, I'll lose too much money. Don't want to get involved in that. So they're reading this article, right? And they're reading, it's one of the more nerve-wracking decisions investors must sometimes make. Okay. First of all, why are your decisions nerve-wracking? Shouldn't be nerve-wracking. You should know exactly what you're doing and why you're doing it. So this is already putting this idea in your head that it's a nerve-wracking decision. Trading should not be nerve-wracking when you make decisions. It should only be nerve-wracking if you don't know what you're doing. If you're guessing, if you're not sure of your method, if you're not sure if the logic you're applying to the charts is correct, you know, you might be racking your nerves, but really nerve-wracking decisions should not be part of your life if you're a professional. Let's move on. Should you buy a stock immediately before the company reports earnings, or should you wait? Making the wrong call can prove costly, and that cost is often paid in the form of missed gains. So you know how you hear a lot about fear of missing out? Well, what is this article starting to already tell you? That most of the times, if you don't make a move, even though your nerves are racking, you're going to miss out on gains. So right away, this article's playing with your emotions. And I guess in some ways, when you read this article, you may think to yourself, well, I think the reason why they're writing that article is just to connect with traders, because most traders feel this way. So they want to connect with them. Right. Okay. That's one way of looking at it. Another way of looking at it is when you constantly are bombarded by articles connecting with you on this level. Are they really helping you, or are they keeping you at that level? Okay, think about that. So I'm reading through and I see software giant Microsoft is forcing such a decision on investors right now. Oh, this is the one that really caught me. Is anybody forcing you to do anything when it comes to trading or trading decisions? Is anybody forcing you? Nobody's forcing you. But again, this is tied into the emotions. Nerve-wracking, fear of missing out. The company is forcing you. 3 points that do not make you in charge of your trading. Do not put the power of you making your decisions on you. The article is already disconnecting you from that process that you really should be tuned into. So I'm reading this article and I'm sharing with you my perspectives of how your typical trader is connecting with this article. Then we're going to get into how you should be thinking about things. And I'm going to give you a whole new perspective on how to look at a chart. Because from my perspective, as I'm reading this, I'm thinking to myself, trying to get traders emotionally responsive, trying to make you think that you may be losing out on gains because after this earnings call, price is going to go higher. Okay, let's dig a little bit deeper. The company is scheduled to post its fiscal third quarter numbers after this Thursday's closing bell rings. Although the stock has proven incredibly rewarding since early last year, its pronounced weakness over the course of the past few days is a serious red flag. Its pronounced weakness over the course of the past few days is a serious red flag. Are investors filling out their Microsoft shares in anticipation, filing out of their Microsoft shares in anticipation for disappointing Q3 numbers? If so, it could be a hint that they're already planning to see the proverbial glass as half empty, as opposed to half full. Okay. Or maybe this sell-off is a mistake that will be corrected by a bullish catalyst waiting within the third quarter report. Obviously, nobody owns a crystal ball from a risk management. Okay. So you don't need to have a crystal ball. I hear this all the time, right? You don't have a crystal ball. You don't need a crystal ball when trading. From a risk management perspective, though, the smart move right now is not buying Microsoft stock before Thursday release of its Q3 results. Here's why. Timing isn't actually everything, but okay, timing isn't everything. Sorry. Timing is everything. In my opinion. Why? I'll show you why it's everything. First things first, a year from now won't matter. Okay, so the idea is if you wait over 5 years, timing's not going to matter, because if it's supposed to go higher, it's supposed to go. If you want to look at it that way, that's great. And you know what? There's nothing wrong with having a longer term perspective. Nothing. But for me, the way I look at things is to time your entries with precision means that you can place a stop loss close to your entry. Okay? And if you are correct with your entry, price will move in your direction the moment you get in or very soon after. And because your stop loss is very close to your entry, that means small risk, large reward. Otherwise, if you're going to wait 5 years and you're going to buy into a stock, where are you going to put your stop loss? How far down do you have to, how much wiggle room do you have to give it before it actually goes in your favor? So those things matter to me. Okay, so we go through, if it doesn't feel right now to not at least try to optimize your trades entries, though, the lower risk, higher odds move here is holding off on stepping into Microsoft stock. Okay, so let's take a look at Microsoft stock. I told you S&P is coming into some buying right now, right? We were looking at that, and we saw S&P coming into some buying. All right, so now we take a look at Microsoft chart. Here we go. This is what we got right now. Yes, we had a long signal here at $378, and it's done well since then. So when I look at a chart, I look at it as a relationship with somebody, all right? You have to be able to trust the chart for you to be able to invest yourself into it. Just like in a relationship, you have to be able to trust the person before you invest yourself in the relationship. In this case, I'm thinking about buying Microsoft shares. But I need to trust that Microsoft price, the price of Microsoft, is going to continue going higher. So how do I know that, if it's going to continue going higher? Well, the first thing is, you have to see what the big institutions are doing. That's number one. Because who's buying the stock that's causing price to go up? It's not you or I. It's large institutions that are buying it, that are pushing it up. And the amazing thing is that when you know how to locate the institutional buying and selling on the charts, then you can start to see where price is, where the institutions are coming in and buying, and at what price. So if the big institutions are coming in and buying, then that means I can trust to a certain extent that price is going to continue higher, because there's a commitment being put into the stock by the big players, the ones that actually move price. Okay, I'm not interested in what Blow Joe down the street is doing with Microsoft stock. I'm sorry, I'm not interested. I'm interested in the big players, the ones that actually cause price to move from $200, $220 to $420. That's who I care. So I look at this like a relationship. And let me bring my pen up here. And it's about commitments being made in that relationship, right? When you're thinking about getting into a relationship with somebody, the first thing you're looking for is a commitment from them. Some kind of commitment that will show you that they are putting effort into you and that you can count on them. Now, for instance, when we had price rallying up here, this is what we had, okay? Leading up until 2022, this is what we had on the chart. You had price action up, 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 up. Pretty decent, right? Pretty decent, I'd say. And so where were those commitments? There was a commitment here. There was a commitment here from the big institutions saying, we're supporting this stock. We're committing to this stock right here. So much so that we're going to elevate price, elevate the relationship from this level to this level. Okay? And then what took place? Well, let me show you. Price started to make its way back down to that area of commitment. Right there. You see how it came back down into that area? Okay. So when things are good, price moves up. When things are bad, price moves down. It's like a relationship, right? It's not always good, and it shouldn't always be bad. There's ups and downs. But through those times where things aren't good, what do you have? You have that commitment that was made to you from your partner, a commitment that you made as well to the relationship. And a lot of times when things are bad, you have to resort to those commitments and those promises that you made to each other. Microsoft's the same thing. Price was dropping, didn't look good. So you're thinking to yourself, should I hold this stock? I don't know. We're going through some bad times. You don't just break up the relationship because you're going through some bad times. You have to hold yourself to those commitments. And there's different levels of commitments. You know, just like when you first started dating a girl back in the day, right? There's, hey, do you want to go steady? Yeah, sure, we'll go steady. That means, you know, I'm only dating you. Okay, one commitment. Hey, do you want to see each other, like, let's see each other twice a week? Okay, that's not the commitment. You're committing 2 days of the week to that partner. Then you give them a promise ring, right? There's different levels of commitments. So we have this area here. Price comes down to this area. So the idea is that because that commitment's very strong, it's going to help support the relationship. Now, what we can see here is that Microsoft price dropped and penetrated through that area. What does that tell you? That tells you that commitment is broken. Just like in a relationship, you're making commitment to somebody and you break the commitment. It doesn't mean the relationship is off, especially if it was like a first or second level type commitment. Doesn't mean the relationship is off. It just means that, hey, how are we going to come back from this? You know, there's very, very, there's very big promises and commitments that we've made to this relationship, but you just broke through one of them. You've hurt this relationship. Price is the same way. I want you to pay close attention to what took place here, because this was one of those commitments that got taken out. Here's a second commitment that got taken out right here. And then price stopped here. All right. So as you can tell, we're looking at a monthly chart. Monthly is a pretty big time frame. You know, I look at multiple time frames, going as high as 12 months, down to as low as 15 minutes. And each level of commitment on each time frame represents something. Usually the bigger the time frame, the more serious the commitment, the more reliable. Somebody says, sweetheart, I'll be there tonight, 6 o'clock to meet you for dinner. They don't show up. All right. It's not the end of the world. That was a small commitment based on one day. But the bigger commitments, you know, like here's a wedding ring, let's get married, you know, and then you go down the aisle and your family's there for the whole ceremony. That's a big commitment. So a couple commitments were broken through. A couple promises in this relationship were broken through. What would need to happen? A rebuilding of commitments in order to establish trust. So I'll play forward what took place here. And what I won't show you are some things that I would show students at this point, but I'll just tell you this, that right here was a massive commitment being made by the big players. Massive commitment. So now we're starting to reestablish that trust that I was talking about. Big commitment came in right here. But how do we know that? Well, we kind of did know that before it took place. But here's the important thing. Once that established commitment is made, progress in the relationship starts to take place. And how do we know that? Well, we start to see roadblocks that were once placed in the relationship, roadblocks that were once placed on the charts start to be demolished. And new commitments start to come in. New commitments in the form of new buying by those that are responsible for moving price. So once you have new commitments, new trusts, you start to recognize that this is now something that is reliable, something that is building a strong foundation. You don't want to get into something and the foundation below you crumbles. You want to get into something where the foundation is strong. And so new foundations are being created here on the chart. Price continues higher, makes new all-time highs. Just a little peak, but then establishes more commitments to the upside. So as you can see, I'll speed this up a little bit more. Price comes in. Here's one commitment here. Here's your second commitment. After significant commitment right here, price continues higher and higher and higher and higher. So now we're in a situation where we were at one time, where price was at all-time highs, and we had a significant commitment down here. But the reason why price retraced here was to make a larger commitment down here. These commitments were broken, but eventually trust was reestablished when the larger commitment. It's almost like they were dating here, okay? Then, you know, the promise ring was given back and the relationship almost broke, but then a new commitment was made. Will you marry me? Both partners become a little bit wiser, a little bit more intelligent, emotionally more stable, a bigger commitment. Will you marry me? Yes. All right. They set the date. They get married. They get married. Then they buy a house. Then they have kids. Okay? This is pretty good. You can pretty much rely on this. Pretty high odds, I'd say. But now we're getting a little bit of a retracement. There's no all ups in any relationship. There's going to be ups and downs. But there's been a strong foundation built here of commitments, locked in by a very solid commitment down here. Price retracing, no big deal. Timing the markets, yeah. Understanding what is actually taking place in the markets, you got to know that. Otherwise, what are you doing? So do you recognize my perspective on the chart is completely different than your typical traders? Completely different. Microsoft's not forcing me to do anything. I'm not racking my nerves. I'm not thinking, oh, I'm going to miss out. Not at all. I'm looking at everything and I'm seeing the relationship. I'm seeing the commitments. I'm reading what's really taking place. And I see an opportunity before me. I see that prices are turning down, but we've got strong commitments here to hold this up, a strong foundation to keep things moving in a good direction. I want to get in when things retrace. That's the best time to get in. So timing the markets is crucial, but when you put it into the right context of what is actually taking place, in my mind, it is absolutely essential. Okay? And so that's it. I won't leave you with much more than just that. But I thought it important to give you an idea, different perspective on things, a different way of looking at things. And it's amazing when you start to embrace a different perspective, one based in the reality of the markets, you start to see how well things play out for you. So that's it. If you liked this episode, great. I hope it was something that will open your mind to new possibilities. And that's it. I'll leave you with that today. And yeah, hope you enjoy the rest of your day, and we'll see you tomorrow morning. Thanks everybody for joining me. Take care.